right, 9:04. Got about 26 minutes left. You can see pre-market, it got down to about 423.8 or something. Coming back up a little more. We're going to get a new weekly range. Where's that new weekly range going to be? So you don't want to, the more you work with this indicator, the more you will literally be able to look at it, see where those low time frame trends were, see where all the volatility was to the downside or to the top side, and you'll be able to place that new weekly range. You get pretty good at it. You know, a lot of people are going to be down in here, right? No, look at this move. Look at this move on Friday. I bet this weekly range, I bet the top's up around 425. It's probably going to be a bigger range. Let me see here real quick. Yeah, it's definitely going to be, because we start out, right? We started out the week and SPY dumped down. All right, dumped down to the bottom of the weekly range, and then wow, Wednesday just gapped. That was that big gap up. That was the stream we were having. P-Funk was on. And ever since then, to the top. So we're definitely going to have a bigger weekly range. I could see the top, like I said, be around 425. The bottom, I mean, hell, the bottom could be down here around 423, 422.50. Probably going to be pretty big. But that's pre-market. Here we are, right? Coming down. Already going to be testing it, which is good. That's what you want to see. That's what you want to see. Early test. So you can get, get rid of any anxiety there might be where, hey, that range didn't get tested. That's what I love about these traditional markets with these pre-markets, especially Monday morning, because you want to see where that pre-market, where that price is going to open up. In pre-market, did you move through those volatility ranges? Were they already tested? Because that's always great. When you're heading in one direction, doesn't matter, bear, bull, whatever. You see those weekly, a new monthly, a new weekly, the new dailies. When you see that pre-market price action gap through there, that's something I love to see. It kind of sets the tone, and especially on Mondays. Which this was great right here, right? This was great right here, because, and I even talked about it, where price action was above the weekly range, and it gapped to the top side and rejected at the R1, then came back and gave a full test to the weekly, right? And the daily. And we all know, you can look at wicks, you can look at candle closes on these volatility ranges. It's straight ridiculous. That's why we use them. Very powerful. I love it. Love my little indicators. Okay, let's pop over. Actually, what time is it? Yeah, I can go over to BTC real quick. Let's check out this new weekly range where we're waiting for the market to open. Yeah, here we go. So, of course, what does BTC do yesterday? I was watching these charts hard and heavy last night, too. We pump right off the top of the weekly, right? We open up the new day, come down, test the top of the new weekly range, and then pump like $1,000. Pretty sure it was. Yeah, pump about $1,000. And then overnight, sell off. Right? Boop, 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 boop. Right back, testing the weekly range. Which makes sense. And you see something, when you see a pullback like that, and then you wake up this morning, SPY's gapping down. So without even looking at that SPY chart, I could have looked at BTC first and said, guarantee you SPY's gapping down this morning. Just because of the way BTC's moving, and they're highly correlated. This is the thing that people don't get out there in trading land, especially retail traders. I'm going to go out on a limb here and say not only retail traders, you got the whole damn crew over at Tasty Trade who trade options. They don't understand it, which kind of blows my mind. It's I would think if you're trading options, you'd really want to know about correlation, especially when we're talking about volatility. That's what they base all their trades on, right? Implied volatility, though. Right? You get, when implied volatility is high, they're looking to sell premium. When it's low, they're looking to buy premium. It's the age-old thing where, hey man, yeah, wouldn't it be nice to know exactly how that volatility is correlated to the price action, right? And then be able to work down through time frames, get a workflow, get good entries on your options positions. Because that's what happens with a lot of people in options. You get in really bad positions. You get really bad entries. So yeah, just got to work on that. Me included. I'm not I'm not excluded from that. Options is not easy by any means, but having these indicators, having the reverse mean of log returns and the projection boss. I mean, are you kidding me right now? With trading options, do people really understand what these coda wolves have put together? For crying out loud. When you're literally, so say new options, right? We get new options. They start out. You run your projection. Now me, I love strangles and straddles. I just love them. You can't go wrong. Sometimes they might turn into some little more complicated strategy, right? But strangles and strategy, or strangles and straddles are something I really like to put on. Now, do I just wake up one morning and say, hey, I'm going to put on a strangle? No. I wake up in the morning, I look at all my indicators, and I'll be like, am I buying or am I selling premium? And as what usually ends up happening is that trade will end up turning into a strangle or a straddle, especially if it doesn't move in the right direction for me. Right? Because it's not like I'm just going to get out, because we know how volatile these markets are. And I've already made a decision based on like 45 to 60 days out. So I'm going to be looking for a lot of that volatility. And so say I buy a put, right? Say I buy a put and the fucking thing turns around, starts pumping. Well, I'm going to buy a call, right? I'm not going to get out of the put because hell, it could turn around and go down again. That's what's great about strangles and straddles, especially when you're buying premium, right? You're only going to lose the premium. So you got to think of it that way, which is good. Totally different when you're selling premium. Be careful. Don't be that guy that's jumping out of a 30-story window of a building because you get a margin call for a couple $1 million because you don't understand options. And these bucket shops literally let these traders sell premium. It's like, oh boy, here we go. You'll end up divorced, living under a bridge with your ledger if you're not careful. Selling premium is dangerous. Real dangerous if you don't know what you're doing, especially if you do not know how to leg up on that position, for God's sakes. Don't do anything stupid. I mean, if you're selling premium and that thing starts turning against you, turn that thing into a strangle or a straddle real fast. That's usually my first go-to. No matter if I'm buying or selling premium, if that thing turns against me, I'm not just getting out of the position because we know how volatile these markets are. I'm going to add a leg. I'm going to turn it into a strangle. And then boom. Now it gets really tricky though. You got to understand, because that could turn into a butterfly or a condor, or you need to study on how to, is what ends up happening is that you're going to cap your risk and your profit, right? Your profit and your loss is going to be capped. And usually when you do moves like that, the profit's not going to be as good. That's why they're great trades. You really need to know what you're doing is where I'm getting at. And that's a trial and error thing. That's a trial and error thing. And for me, the best thing to do is to start with buying or selling. And if that position turns against you, turn it into a strangle. Protect yourself, right? Protect yourself, indeed. But like I said again, I would highly suggest starting out buying premium, right? Buying premium. People are like, yeah, but I want to short it. Look, you need to understand options. You can buy a put. You can buy premium. You can buy a put, right? For the market to move down. That's not that's not what buying and selling premium is all about. You can buy it either way, and that's the safest. And if you're just learning options. But what started this whole conversation was these tools are incredible. You've got daily distribution ranges, you got the reverse mean of log returns, and you've got a projection boss that is literally projecting the distribution into the future out. It just gives you, if you're going with the 95 for Laplace distribution range, you're going to have a really fun time trading options, right? This is what people that are just blindly trading options, they have no idea into the future, right? There's so many people, especially young traders that are going on to, like Robinhood and stuff and trading these options. They have no fucking idea what they're doing. They're just buying calls, buying puts. I'm pretty sure. I mean, hopefully some of these exchanges, I haven't used Robinhood, have some sort of wall up that does not let new traders sell premium, because you're going to get people in a lot of trouble because they don't understand, right? Your risk is in. I mean, there's no cap on it, right? No cap at all. You could lose a fortune real fast. But this is what we talked about last week. Now we're going to move on. Look at the new weekly candle. What's happened? After literally 1, 2, 3, 4, 5, 6, 7, 8, about over 2 months, about 9 weeks, almost 10 weeks of price action. The returns have mean reverted, right? BTC's price action is above the reverse mean of log returns. It's at 23,786. Right? So we did, and I talked about that if we closed up here above the 95.4, close up by the 1SD, that this new weekly candle is going to open up in this little trough on the weekly, and it sure did. So here we are. And now we get to see what's going to happen. What I really like is that this reverse mean is right down here. You know what? Hold on real quick. Forgot we had a new week. Back this baby up one. Doop. There she blows. Let me save it. Okay, so you got the 95.4 on the distribution right below it. So if this thing wants to dump out, right, get a little pullback, maybe a little candle refill here, we do have this support level, this 95.4%. And this is the issue I'm having, why I haven't started a new projection. Look at this choppiness. Man, I don't feel comfortable throwing a projection anywhere right here. Look at all the wick. Look at all the wicks. Right? And you've got 1, 2, you got a bearish candle. You got these 3 bearish candles in here. There is no good place to start a distribution. Right? Now, we're on a weekly. You drop this down to a daily, you're definitely going to find some action. Let's see here. Pull this up. I mean, there was, but it was a while ago, right? I mean, if anywhere, I'd start it right here. Let me back this up. But I was wrong. There really isn't. I mean, even on the daily, look at this. I mean, you'd start a down move, right? But I do like this. We did get outside the 95.4 here, all right? Pulled back. We got the reverse mean now, right? Look where the daily is right now. All right? Look at this daily candle, right? We ran up to the top side up there at 25.2, which was where? Daily 1SD. Let's go back over here. Boom, there it is right here. Blue cross line. Daily first standard deviation. That's that little blue dot right there. Almost got to the 95.4 Laplace. I'll tell you what, there's a big gap between these on the daily. Yeah, I would imagine it's going to stay. This could go sideways today. We need to see what traditional markets are going to do. But you can see this price action on the lows of the day bounced from the top of this reverse mean. Is what you want to see in these situations. Let's just ride this baby, right? And if not, if we're going to break through this mean on the daily again, right, we're far away again, right? Returns are going to mean revert at some point. Compared to the weekly, though, I love the way this reverse mean looks. It's really come along. Look down here, right? On the daily, what did it get down to? Yeah, like 14. Weekly, God, it was down to 5K or something. Ridiculous. And that doesn't mean price action has to go down there. But that's where the reverse mean of the log returns is at. Is what you don't want to see is it just ride that baby down, because then the market's in trouble. These markets are pretty damn resilient, right? Especially you got everybody, especially retail traders, just listening to the news, basing their trades on news. Oh, the markets are screwed. The economy's fucked. Yeah, and I mean, it's just like, so we don't care about any of that. The volatility is going to tell us. The entropy is going to tell us. All our indicators, right, that are based on returns, they're going to let us know what's going to be happening with price action. Why? That's like this whole thing. It's just one massive prediction model, in my opinion, because a lot of these indicators are based on the returns. Price action follows the returns. This is where the divergence between those two comes in, right? Because when you get divergence between things that matter, I don't want to see divergence between price action and the relative strength of the index, right? What good is that? Does that make any sense once you start using the returns oscillator? What good is that? And it pretty much, the proof is in the pudding. People get wrecked using that type of divergence. That divergence is not to be traded. And if you are going to trade it, it is tricky. I've done it before, but I ran 3 RSIs, right? 3 different lengths. I had a formula. I got it to work. But you shouldn't have to tinker with shit to make it work. You don't see me have three returns oscillators. No, I only need one. All right, I only need one length. As low as possible, in my opinion. I run mine on a 7. The only indicator that I'll run something like that doesn't go along with, my number philosophy. So for whatever reason, I like the number 7 on the return oscillator. And that divergence is important. It's literally telling you the return on your investment is diminishing. Period. The end. It really helps a lot when we're trying to trade all this, right? These low time frames, when we're trying to ride out that profit, we have the tools. It's amazing. Entropy and volatility, incredible. You throw in the variance, the Z-score, the returns oscillator. You got the Fisher for extended trends, right? When all those Fishers, all those different lengths line up, and you got div. There's so many things to point out when you should be taking profit. But most of the alpha traders, right? When I get into a position, the first chart I'm looking at is here. I want to see these volatility ranges. I want to see the distribution levels because I'm going to take my profit quick, right? So like right now, if Bitcoin is to bust out to the top side of this weekly range right here, 24,165, where would be a great area to take profit? For the bottom of the daily. We're talking about little profit takings, right? $100 scalps. If you're down here on the 5-minute or whatever, 3-minute chart trading, there's so many opportunities. That's what people don't understand, right? They is how I look at the way I trade. I'm grabbing all the crumbs, right? I'm grabbing all the crumbs. You can become a fucking billionaire cleaning up the crumbs in these markets by trading these low time frame scalps. They're so available, it's incredible. One after another. Bing, 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 bing. They're just all over the place. And like I said before, if you're setting time to trade during the week, say it's 4 days a week, 6 hours a day, all right? So you got 24 hours a week to trade. I am going to try to get in every damn scalp that's possible. I'm going to clean those crumbs up. And if I can get 10 to 15 trades a day and say they're $100 scalps, and I'm trading with a couple Bitcoin. So that's $200 USD profit on each trade. Add it up, do the math. It's not massive amounts of money, but this is what people don't realize. What happens when you're scalping with 10 Bitcoins? Right? That's $1,000 a scalp. Bing, 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 bing. It's not hard to do. Right? The stakes raise, obviously. The anxiety level, probably going to raise a little bit. Even more important to get out of your trades if they go against you. That's all you got to do. That's what people don't understand. Like, well, how do you get that high of a P&L? I take my profit and I immediately exit bad trades. I don't fucking even give it a chance. If If that 5-minute candle closes below my entry, I don't care what the hell I'm seeing on the charts, I'm going to get out of the trade. Because how many times has that bit people in the ass when you don't do that? You're like, oh no, it's just a quick little pullback. And then you're $1,000 underwater. What the fuck am I doing? Why didn't I just get out of the trade? It's hard. It's hard to take profit. It's hard to get out of bad trades. Why? Who knows? Humans are some of the most fucked up creatures in the universe. You can't explain the the psychology of a human being, but it's like we want to hold on to these things so tightly. When you're playing a game, you're trying to make money. So why the hell wouldn't you get out of bad trades, and why wouldn't you take your profit? Yeah, it's a psychosis. But that's what we're here for, to just beat it in people's brains. Do you understand how many good trades you've probably been in and lost them because you just didn't take the profit? How many have I had? How many's Yasha had? How many's MJ had? None of us are apart from this. I mean, I've done it. And it is a miserable ass feeling when you're in a winning trade and you just watch the profit disappear for no damn reason at all because you just didn't get the hell out of it. If you're in a long, you just couldn't hit the sell button. Right? You couldn't get out of the position. That needs to change for people. And when that changes for people, that's the first thing. You got to learn how to take profit and recognize when you're in a bad trade. Just get the hell out, take your profit. Everything else is going to come. We got the indicators, right? But if you don't have that base first, I don't care what you're using to trade, especially in a super volatile market. You can have somebody in the future giving you signals, right? It doesn't matter if you're not taking your profit. Because we all know in Bitcoin, the future on Bitcoin's like 30 seconds. Then you're screwed after that. You better get a new read. Things change fast. Got to take that juicy profit. And we got plenty of tools to recognize where those areas are at. Or you can keep it real simple, right? Because when BTC has a nice little move on the 5-minute, you kidding me? You can get $100 profit real fast. In a 30-second candle, it can move $100. This is what people don't understand, but you get greedy. You want more. Why? Just take that quick profit. If the chart is still attractive, get back in the trade. It's simple. It's so simple, but at the same time, so hard. So hard. It destroys a lot of traders. They never even give themselves a chance. They end up broke because they never took their profit. I mean, who doesn't want to, it's like, who doesn't want to jump in a Lambo all sexy and ride around town for 2 weeks and be in a fucking position and, okay, now I'll close it out. I was up 4,000%. This is awesome. But that's just, I'm telling you, that's the kind of crap that's going to bite me in the ass. Can it be done? Sure. But after that period of time, look at all the ebb and flow in that price action you just missed out on. Look at all the counter trend scalps you missed out on. Do the math and see how much profit you missed out on. That's what's incredible. That's what people don't understand. They want to sit in these long positions. My God, you're throwing away a ton of profit by just watching that position go up and down, up and down, up and down. No good. No good, Charlie. Just take the damn profit. Trade below time frames. I know a lot of people don't because YouTube Jimmy's out there saying don't trade low time frame crypto. It's dangerous. Oh, it's way too volatile. When you hear them say that, I just immediately laugh because that's what we want. Right? We want volatility. And most people out there that are supposedly attempting to teach people how to trade tell people to stay away from it. Bad time to trade. You don't want to trade when the market's highly volatile. You could lose your ass. Not telling people, hey, volatility's great. It's the exact time you should be trading, and you should be taking profit off, and getting as many small positions as possible on the way. It's insane. Monday morning rant. All right. What time is it? Oh, yeah. Get the fuck over here. All right. So, SPY. Talked about it. Oh, I pulled up a little more. So yeah, I'm telling you, the top of this weekly range is going to be really close to where this pre-market price action's at. Let's see it populate. Ding, ding. Let's go. Let's freaking go. And to be honest, so we're down here, and that's probably gonna be, I tell you what, man, this might be down close to 1 SD on the daily. Definitely past the 68.3, I would imagine. Although, where's the new daily range? You know what? This week might be a little deeper. We could get this weekly down here. This is going to be interesting. No, I was right. I was dead right. There's the top, 424.32. Middle of the weekly is down here at 421. There's the bottom. There's the bottom. And like I just said, it's outside the 68.3. In between the 68.3 Laplace and the first standard deviation normal distribution on the new daily candle for SPY. So fantastic. So, and this is what people are going to do. People are going to be like, how the fuck did he know where the new weekly range was going to be at out of this gobbled damn mess? All this price action last week. Hey, I don't know. I've been staring at this chart for about 3 years now, right? I can look at a week's amount of price action, look at where the volatility was, to the top side, to the downside, wherever it was, how price action was reacting, how big or how small the daily ranges were, right? All the SPYs were tied all week, damn near, right? So there you go. So I take all that into account. Literally, before that new weekly even popped, I said that that's where the top of the damn weekly was going to be, right around 424. I was pretty damn close. So, and that's just, boom, just looking at it, because I've looked at it so much. It's not like it's magic. You just stare at something long enough, right? It's like a sweet old couple that can finish each other's sentences. They've been together so long. Have managed to make it not get divorced like 4 out of 5. Praise be to everybody that's able to conquer that. Keep together a relationship for a long period of time in this crazy world. But yeah, that's how I look at these markets. It's a relationship. That's how I look at my indicators. It's a relationship. I want to know what these things are thinking. I want to be able to work together to complete the mission. All right? Because I know these charts are tired. I got them up constantly. I'm like, hey, you think maybe you could go on vacation for a couple weeks and just put us to rest? But good. So SPY's already down here by the top of the weekly. But what did BTC do? All right, what did BTC do? It rocketed away from its weekly, right? Sent a wick down to the top and then came back and got a nice deep test into it. This is going to be interesting. I want to see what BTC does here at the top of the weekly range. I'm telling you right now, BTC rejects right here to go lower. You'll see SPY coming. You'll see SPY go down into the meat of into the meat of their weekly range. Freaking dog's going crazy. Let's see here. Let's see what else. Yeah, I knew Solana was going to pull back. Solana and Cardano were probably going to have the biggest hits. Except that shitty old Dogecoin. God, meme coin USA. So yeah, that makes sense. Let me see something. What's oil? Oh shit. Well, drop them prices then. You fucker. Paying $5.20 a gallon for diesel. I'm ready to go get somebody. Yeah. Oil took a dump this morning, man. VIX rising a little bit. Dixie went back up a little. I bet this thing's flat today. I just have the strangest feeling. This thing's going to be flat. I could see tech stocks maybe pump a little bit because they had a rough one. But I could see everything go a little sideways today. Let's look at this volatility in the daily. Contracting still. Let's see. What about SPY? Expanding. Any div? Yeah, there's no div. Was there a BTC on the daily? I don't think there was. That's why people are like, why is that? Why does he always go to that div? Boy, that div's silly. You keep thinking that. You keep thinking that div's silly, and you keep being on the other side of these trades. That's fine with me, my man. Fine with me. I got no squabbles with you. There is some bear div on the daily. This thing's just messing around. Boy's really trying hard to stay above that zero mean, but it definitely dropped below. But this is kind of what you want to see. There is no correlation. This baby is just like, we're going to let them figure it out because it is flashing. There is no correlation right now. So you're wanting to see something. All these fishers are turned down. The Z-score was up here for a while. Couple rejections off these confidence intervals. The variance has been pretty flat over the last about week and a half. Let me see. Yeah, I mean, when the DLP over a long time series here, I mean, a lot of bear div, and you're seeing it. You're seeing it all on all the indicators. Return oscillator, Z-score, it's all over the place. So it would not surprise me at all to see this thing pull back a little bit. But yeah, that's why you use your workflow. So I'm seeing that on the daily. What am I seeing on the 4-hour? I'm seeing that we got an outlier on the Z-score down into these confidence intervals, and we have got. I mean, yeah, there's a little bear div, not as much as there was on the daily. DLP finally, yeah, and that's where a lot of it was. That's what's great about the DLP. All right, you can see from this point right here, it's all been lower highs. Right, all higher highs. Every one of these data set points. The volatility is literally on the 4-hour, pretty expanded. I mean, we're at a 96. It was at 100 though. Was at 100. Let's check this 90-minute out. Oh yeah. First thing I see is no divergence. A little bit of bull div on the Z-score. This volatility pretty much dropped off a freaking cliff too. Grade dumped out. That's what I'd love to turn these options traders onto. I mean, this AVR is so powerful. You throw that grade in and everything. It's like you use implied volatility, right? And they're like, yeah. Well, here, check this out. Look how powerful using implied volatility, historical volatility, and volatility percentile together is. Very powerful for you. Oh, that's not enough? Well, hey, maybe you should check out the projection boss and the reverse mean of log returns, our current candle deviation levels, and all the other great tools for options traders that we're hiding away in the alpha trading Discord. All right. Yeah, I mean, you can see we got a wick up to the top of that, and it's kind of rejecting down. And just everything I'm seeing, you know what? Let me throw this on a weekly. Let's see what's changed up here. Predictor sure hasn't. I mean, in this predictor on the weekly, heading back into randomness since the trend, right? From that 48K high down to when we swept the lows at 17.5, right? I mean, just look at the weekly predictor. All right, let's flip it up. Crazy. Crazy how good it is. Now we're starting to get a little expansion in volatility. The 981's crashed too. 981 is crashed. Well, it's at a, pull this back up. Yeah, it's at a 3.7. The 525's at 8.0. The 2400's at a 25.75. And when you see low volatility like this is what I talk about all the time. Look, all this move, right? This move up, contracting volatility, negatively correlated. That will, I say usually, will ebb and flow into expansion, heading into positive correlation. We'll see what happens with this. That's on a macro level. That's on a macro level. All right. Throw this on SPY. Let's look at the weekly on SPY here. Predictor's still strong. I mean, this whole up move on SPY, right? It was going back into randomness last 2 weeks. It's starting to drop into trend. Predictor hasn't flipped at all, and there's no divergence. There's none, right? You got a higher high from this point, right? No div there, so we go back to this point. Good. No divs.
Why do you go back an extra point like that?
For long-term stuff, just to see if there's anything building.
Okay, so you like stretch it out, make it a little bit longer to see. All right, I got it.
Yeah, and sometimes if I see something that's kind of putting a thorn in my side, just something out of the ordinary, I'm like, well, yeah, that div's there. I am going to take that returns oscillator and say I'm looking back. Let's see. So if I'm going back to that point right there, so we're talking, that would be 21 bars. I've got my return oscillator set on a 7. So I'm going to go to the returns oscillator and I'm going to set the length to a 21 and see if the div is still there. That's always good to do too, because when you're looking for divergence and you see a point of divergence that's sticking out to you, the first thing you want to do is change the length on your returns oscillator to exactly the length you're going back and seeing that div on the candles. Then it's going to give you a true read whether that div's there or not. That has changed my bias many times. Many times.
I'm trying to learn this one a little bit more, that return oscillator.
Yeah. It's once you get the hang of it, it's easy. And that's all. It's just an oscillator. It's just literally telling you what the returns are doing. And then with the correlation too, which correlation right now, I mean, look, the returns oscillator turned down on SPY 3 weeks ago and it's been doing nothing but going up. Look at the correlation. You got 2 red candles telling you that the correlation between the returns going down and price action isn't there. Telling you price action's probably going to do the exact opposite, and that's exactly what's happened. But when you get a nice move on the returns oscillator, and you do get a nice positively correlated, you start getting those positively correlated candles, those are the moves you can trust. It works. Now, we're looking at a weekly. We all know, I don't care what indicators you're using. When you're on a weekly, shit moves slow, right? Shit moves real slow. That's why a new week, I start on the weekly. Before you know it, I'm moving through the daily, the 12, the 4, the 90, the 45, the 15. Then I'm partying on the 5-minute time frames. It's like the macro doesn't really mean that much when you're trading the 5-minute time frames. But overall, right? Because if I'm seeing a bias on the weekly and I'm seeing a bias on the daily in the 4-hour and they're all matching up, do you think on the 5-minute I have got all my risk on? Oh, yeah. All of it. No leverage. Don't need leverage. That's what I tell people. But like this one guy, he's like, well, I need to make money. I'm like, how much money did you have in your account? $1,000. How much leverage were you using? Well, I was like 50x. And this is a guy that lost half of his account in barely a tiny little volatile move. Loses half his account. It's like, well, obviously we're using leverage. Good thing you got out of the trade. You would have got liquidated or whatever. But he's like, well, how do you make money without using leverage? This is where we're at. This is what we're up against. It's sickening. It's like, you, my friend, have been misled. You do not need to use leverage to make money. You learn how to trade these low time frames. You can take that $1,000, run it on yourself. See how long it takes you to build that $1,000 up to a Bitcoin using no leverage, using these models, trading the low time frames. You will shock yourself how fast you can do it if you're consistent. If the biggest thing you need to do to continue building an account is get out of bad trades. Don't give it back. I'm telling you right now, the volatility in Bitcoin, it will rape you. It will take every bit of profit back from you you've ever made if you let it. And that goes with any market. We all know they're vicious. They're vicious. That's why a lot of people, after years, what do? They move to options, right? It's not as stressful. Things move a little slower, depending on what type of options you're trading. If you're doing daily options or something, it's party's on. But yeah, it's good stuff. We are happy. We indeed are happy. Now let's go over here. Let's see what's happening. Yeah, but we want to see BTC BTC get back up above this weekly range. I'm telling you right now, and I think SPY is going to have to get a better test. I mean, it came down, it didn't even get to the top of the weekly. I mean, I just have a feel I could see this today get down around 421.5. I could see this thing dump a little bit. Just to test the meat of this weekly range down in here. And see how that, because this is what it does. The buyers and the sellers. It's simple as shit. There's buyers and sellers. So what's happening in this market? It's a continuous test. Right? It's a continuous test. Do these bulls mean business? We're about to find out. Here, I'm going to hammer the red button. Let's see how they react. And it's just back and forth, back and forth, back and forth. All these massive algos, right? Just moving these markets around. Like Yasha was talking about, like on Friday. The amount of money. That's the thing. People come into crypto and there's like, you meet some random Jimmy and he's created a trading bot. Run for your life. Whatever you do, don't use it because you're gonna get wrecked. Because a real good trading bot costs a lot of money to develop. Not small. We're not talking six figures, right? I mean, it's a lot of money. Just development. It's like, so if you're hired on by some massive firm to create this trading algorithm, right? It takes a long time. That thing is going to be tried and tested, just beaten up to make sure that it's going to be something that this big firm can rely on, right? So it's going to cost a lot of money. And then you've got these people building their own bots and think that they're going to have any impact in these markets at all. These big bots are built to trick the little bots into bad positions. It happens all the time, right? Like we'll use Frosty Bot as an example. This dude just shilling the shit out of it. People using it. Everybody's getting wrecked. Of course they are. Of course they are. Unless you've got $1 million to spend on the development of a trading algorithm, be your own bot. Trade to 1 minute to 5 minute. Recognize what's going on in these markets with the indicators we put together that are explaining to you what's going on with the returns, where price action is in the distribution of the returns. It gets a lot easier, right? And just take your profit. So what are you literally doing? We're using these tools to recognize what these big algos are thinking. We're jumping on their fucking coattails and we're picking up the crumbs. That's all we're doing. There's billions of dollars in these crumbs to be grabbed. And it seems like nobody wants to grab them. They all want to try to swing trade volatility. It's just like mind blowing. But we've all been there. We've all been there. But you do this for long enough, and you start to just see the light, and you're like, oh boy, how much missed profit over the years, right? Has there really been? Tons. Not alone with all the reckless spending. Holy shit. When you're not married and you don't have kids, millions of dollars just slip through your hands over the years. But hey, had fun. Okay, let's see here. But yeah, it's just overall, it's ridiculous. And like I said again, you ever see anybody talking about they're building a bot, just run. You see somebody selling a trading bot, run, right? Because you're going to get taken advantage of big time. It costs a lot of money, and it takes a lot of time to build something like that. Really does. Because you are going to get, I mean, these big firms, imagine how much money they're trading with and how the high frequency of their trades. This bot has got to be a superstar, man. A superstar. And so when you can recognize what's going on with these massive algorithms and how they're moving these markets, if you can recognize those signatures in these charts, that's all you're doing is jumping on the coattails of these big mechanical beasts. Or like we've always talked about before, when you're down here trading the 5-minute, it is a literal shark tank. 5-minute and below, you are swimming with the big dogs. You're in there, they're big, mechanical, great white sharks. And then here we are, the alpha traders. We jump in that shark tank, we're flesh and blood, great white sharks, swimming with him. They look at you and they're like, oh, fuck, somebody figured it out. And you're just swimming with them. You're eating. You're just gobbling up these retail traders, one after another with them. But the one thing you're doing, you're like, okay, thank you. And you're backing off. You're taking your profit. Because we all know how fast these algos move. That shit can turn around so fast and eat all your profit away. That's why you just got to take it. Ching, 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 ching. If you're long, you're selling. If you're short, you're buying. It's simple. You're either hitting the red button or the green button. There's only buyers and sellers. Unfortunately, 80% of all that liquidity is these high-frequency trading algorithms. And if you can't recognize what they're doing, I'd find something else to do with my time. 100%. I mean, or people just are gambling. If I want to gamble, I'll go to the riverboat. I'll play craps. I'll go to the blackjack. I'll find a fucking single deck blackjack table that nobody's sitting at, and I'll play 3 hands. Right? That's the first place I go. If I go to the casino, I go to the high limit tables. I'll let all the let's see. You look at that like a business, right? Or you're just in there gambling. That you can win money in the casino if you know what you're doing. The problem is that the casinos very quickly recognize that you know what you're doing, and they will throw in coolers one after another on you. They'll kick you out of the casino, and you haven't even done anything wrong because you're winning. It's crazy. They don't like people to win. How do you think they got fucking solid gold doors on their casinos and shit? But yeah, if I want to gamble, it's not going to be in the markets. Right? It's not going to be in the markets. It's going to be at the damn craps table or something, where I'm having fun. I'm drinking bourbon and having a great time with my friends. But when I'm trading, it's all business. I'm sitting down. This is what I do. People have a hard time, like, separating those. You know, enjoying yourself, having a good time, going out to the casino. And then you're coming to trade. Are you going to be a gambler? Are you going to use leverage? You're going to try to beat the system? It's set up to beat you to death. So good luck. And you're trading on exchanges that see everything you're doing. Everything you're doing. And I got a newsflash. If you're using a lot of leverage, you're on their to-do list. You are on their to-do list. Right? They've got you sized up. They got a diaper. right? They're going to throw a diaper on you. You're going to be shitting your pants. They're coming for you. I don't care. I don't care if you got $1,000 in your account or $10,000 in your account or $100,000 in your account. If you're using a ton of leverage, you're a target. You are definitely a target. An easy one. Why? Because they know you're a fucking degen. They know that that you are going to let them just come in and just take all your money from you. And it just happens over and over and over again. So yeah, that's the Monday morning lesson. No leverage. Take your time. Build your account up slowly. Right? That's what it's all about. People are like, how do I make money if I don't use leverage? You got $1,000 in your account, right? Go open up a trade with that $1,000, zero leverage, and take your profit real fast. I'll show you how to make money. All right? Oh, I just only made $50 on that. It's just like, oh my goodness, okay, you're going to get it. What happens if you did that 10 or 15 times today, man? Start adding it up. It adds up quick. And at the same time, your account's getting bigger, which means more risk on. No leverage. I'm telling you, if you're using an exchange and you're using no leverage, you're not even a fucking blip on the radar, man. They're not even interested in you. They don't care if you're winning trades, losing trades. You're not a blip on their radar. They feed off of these leveraged people. And they themselves get over leveraged and get wrecked. And these exchanges, one after another, are just falling off the cliff, especially in bear markets. You see all these projects and exchanges just fading off into the sunset, right? Broke as shit. It's insane. Leverage will ruin you. I don't care if you're a big firm or a retail trader. If you're using leverage, you're going to get wrecked, right? It's just happened recently. And you hear us say, and they're supposed to be the ones that know what they're doing. This is where we're at. This is what we're up against. This is why, alpha trading is just creeping along, doing our thing. We don't worry about new members. Would it be great to have 500 people in here? Can you imagine what this Discord would be like if we had 500 well-versed traders in here, all using the same charts? Not some other crypto Discord where you got two goons fighting over MACD and RSI and which one's better. Go in any other crypto Discord, it's a shit show. Everybody's using different things, telling yours don't work, mine works, I'm blah, blah, blah. Can you imagine the power of having all these people working together, sharing knowledge in the Discord, right? Trade setups. It's powerful. One day it'll be like that. But I'm telling you, until enough people just get severely wrecked in these markets, it's just never going to happen. The draw is too strong. The cult is too strong, right? There's way too many sheep in the world, right? Don't be a sheep. Be a wolf. That's been my motto my whole life. I don't care if it's on the golf course, on the battlefield, fucking trading, wherever. Be a fucking wolf. If you're a sheep, you're going to get slaughtered. There's no doubt about it. Simple. We got a lot of sheep out here. So that's why we put together a group of wolves to attract people. If somebody's a real trader and they come into this Discord and they start reading messages and looking at charts, it doesn't take long. If you give yourself a chance, you'll be like, what the hell is going on? Where has this shit been? All right. Just like I said about 5 years ago now, when I met the guy that created the percentile indicator. And I was like, immediately I saw something. I could see with the volatility expansion. That's the first thing I noticed. I was like, okie dokie. Okay, so volatility expanded that time, but price action went down. How can I figure out what's the key here? Because the volatility is not a directional indicator, but I can totally see when the volatility starts to expand, the price action is moving in one direction and moving in that direction quickly, where there is untold amounts of profit to be taken if you understand that indicator. If you just take the profit, that's what's crazy. And so then I was just dicking around one day, right? And by like chance, I had got a chart sent to me that had a correlation coefficient on it. All right. And so I asked this guy about it. Oh, that's nothing. And I'm like, nah, man, it's something. I was like, I went into the inputs and I changed the source to the percentile of volatility. And I was like, look at this. Look, when that volatility expanded, it was negatively correlated and price action went down. And look at this move. It expanded and went up because it was positively correlated. And he's like, oh no, that's nothing, blah, blah, blah. And the chart I had seen, he went and removed it off of TradingView because that's where the chart was. It was under his first historical volatility indicator. There was a correlation coefficient under it. That's what sparked me. And then he denied it. And now here we are. Everything's correlation. And now we've got this predictor. So yeah, we're moving right along, and it is fantastic. It is fantastic. All about correlation. So that's how this whole thing went down, with correlation. Then I got a couple more people looking at it, and then a couple more people. And then before it, we're just, nice, tight group of people going, hello, this shit's incredible. And it just drives these guys to build better indicators, right? And then we're here. This is where we're at. I mean, right now, we've literally, if you added all the indicators, there's probably over 40. It's insanity. You don't even need them all. That's why there will come a time where we'll have this nice, tight package of indicators. Because if somebody comes in, they want the Pro Trader account. You look on your indicator and you're just like, what in the hell is going on? Because you just get bombarded with this basket of indicators. And it is overwhelming. I don't even have to ask anybody. It has to be. I'm telling you right now, I open it up and I'm overwhelmed at all the indicators, right? There's just a ton of them. So every day, that's our purpose, is to just make this as simple as possible, right? That's the KISS principle. I've always tried to use that, all right? I think I was first introduced to the KISS principle by my high school golf coach. Because you know how golfers are. You're always trying to complicate your swing, right? The golf swing's natural if you just let it happen. If you try to complicate it, I'm coming inside out, I'm freaking not bending my elbow, blah, 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 blah. You're just going to be a train wreck. Just let it happen. Just like trading. Get your right package of indicators, just let it happen. But yeah, guys, I'm glad everybody showed up this morning. Beautiful. It's going to be an interesting day. See what SPY wants to do. See what SPY wants to do here. Because until that happens, I mean, you can see, boy, it pumped right back up above this monthly level. And that is the is that the R1 on the monthly? I think it is. Yes. So we're up here. That's the R1 of the monthly. So we'll see what happens. But I just have this feeling, this weekly range right here, I mean, we're talking top side, 424 area, bottom side, 420 or 419 area. We're going to get into the meat of this, in my opinion. Weekly ranges loves to get into the meat of those volatility ranges. So we'll see what happens. But I could see this go sideways. I could. You can see we got a way bigger weekly range this week, so we'll see what's up tomorrow. But yeah, thanks again, guys. We'll see you tomorrow morning, 9 a.m.